to the little Zoom. It's only 6 of us in here. Shit, fuck it. 6 people gonna eat this week. And today I'm not gonna go crazy with the Zoom today. I'm just gonna go over a little bit of a basis of what I look for when I'm just looking for trades. When I'm looking for setups, when I'm looking for targets, right? As you guys probably know, if you're in the Discord with me, I do swing trading, day trading, scalping, pretty much do it all, right? Some people only do scalps, some people only do day trades, some people only swing trade. I pretty much do all three. So, I'll kind of give you a breakdown of, I guess, how I figure to myself how I'm going to approach these trades based off of the setups that, are presented to me. So we're just going to go over how I find my trades and setups using the strat and price action. So I say using the strat and price action because the strat is a system of analyzation, right? We are using the strat to analyze price action. Price action, though, is kind of like its own entity, in my opinion, and price action supersedes the strat, right? Just because the strat says this and that, price action will do whatever the fuck it wants, right? So that's why I kind of put the strat and price action, because I take both into account. All right, but pretty much, we're just using this system to analyze price action. So when we're analyzing charts, we're always thinking about the 3 universal truths: Brownian formations, time frame continuity, and actionable signals. Now, with this, I don't know why this says click here, what the fuck, but with this, it can be applied to any time frame, meaning if you're a scalper, right, and you're playing intraday timeframes, you can get away with the day being green, the hour being green, right? You can have full time frame continuity on the intraday timeframes, right? And you can play that intraday setup. But if you're looking to swing trade, mainly what you need to see is full time frame continuity on the higher time frames as well, right? The year, the quarter, the month, the week. You kind of want to see a higher time frame bias that will back your lower time frame entry / trade. If you're looking to swing, if you're looking to maybe even day trade, like honestly, you really want to see full time frame continuity on any trade you take, right? But like I said, you can get away with playing the lower time frames if they are going against the higher ones. It's just a little tricky, right? Now, actionable signals are just setups that we constantly see playing out in the market. With actionable signals, it's not going to be picture perfect like how, this setup kind of has it shown to you, right? You enter here, targets here. It's not always that perfect. All right. This is just a general picture. When you're looking at a real chart, it's not going to be picture perfect like this, and it's not going to perform exactly how this picture says it will, right? That's why I say price action is going to do whatever it wants to do. This is the strat. We're using it to analyze price action, but does it need to perform how we expect it to, right? It's going to do what it wants. But these actionable signals are candlestick patterns that constantly play out in the market. And so being able to identify these setups will give you a clearer sense on where you can kind of find your targets, entries, exits, so on and so forth. Brownian formations. Today, I'm not really going to go into Brownian formations, but when I look at trades and whatnot, I do take into account if we've made a lower low, have we made a higher high, I'll go plot it. It doesn't necessarily control my trade though, right? I just want to see the general zoom down. I just want to see the broader scope of price expansion, right? I don't need to see every single Brownian formation in every single time frame, right? I just need to see somewhat of a broader view of where price expansion, where price can expand to, right? New price discovery, blah, blah, blah. I really like to, main things I really need is time frame continuity and actionable signals. All right. Pretty sure that makes sense. If anyone has any questions on that, let me just check the chat. Nope. All right. Pretty straightforward, guys. I mean, we use 3 universal truths to give us a better edge at taking our trades. All right, so we're always keeping this and we're always taking this into account when we look at a chart. You about to leave? Hold on one sec. Hold on one sec, y'all. 1 sec. All right. All right, my bad. All right, we are back. So just went over the 3 universal truths that we use to analyze our charts and whenever we're looking for trades. So now this is what I personally look for when I'm looking at the charts. So me, I need to see full time frame continuity. And I want to see an actionable signal on one of the main time frames, the year, the quarter, the month, the week, to give me a bias. Right. That's a really, really key thing, right? You need to go into the week with a bias. Now, with that being said, you might be wrong. So that's why later on, I'm going to tell you why, even if we're wrong, it'll be okay. All right. But for the most part, you do want to go into the week with somewhat of a bias, right? Us going into this week, next week, I am kind of expecting a bounce back up before we take another leg down next. Well, actually, I'm not sure, but I'm expecting a bounce up this week, right? But I use the higher time frames to give me a bias, right? It got kind of give me perspective on setups, where price might go, how much price has moved, blah blah blah, right? And then once I analyze somewhat of the higher time frames, the week, the month, the daily, the quarter, then I'll go to the lower time frames and kind of see what's going on there. All right, so we look for full time frame continuity. We look for actionable signals. I like to see them playing out as well, like something that's already triggered and is in motion, rather than, we're 2-1 and we're waiting for the next month 2-bar. That's not an actionable signal. That's just a potential setup. An actionable signal would be something already 2-1, 2 up, let's say on the week or month, right? And it's playing out, already triggered. That's an actionable signal that's playing out, and that's something, I want to see. And there's full time frame continuity. It's a win-win, right? We're taking that. I also look for sector strength. And if you guys don't know, this is what, let me go back. This is what it looks like when you look at the S&P from a sector point of view, right? If you've never seen this map, this is FinViz right here. So all you got to do is go to FinViz right there, and then go to maps right here, right? And it's going to give you a heat map of basically all the sectors that make up the S&P 500. So this is tech, this is financials, XLF, this is semiconductors, communications, XLC. What the fuck? My thing is lagging out. Give me 1 sec. Yeah, XLC. This is healthcare, XLV down here. This is XLY up here, fucking Amazon, Tesla, right? So when we go into the map and you can kind of see, where is sector strength? Well, right now, everything is kind of fucked, right? We see some green here in space, defense, industrials, right? So if you see that there, what do? You would go into the sector, right? Go to, I already have my watch list set up. I would go to defense stocks and look at some of these defense names, right? They are kind of looking good. 2 green on the quarter, consolidation on the month, blah, 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 right? So that's what we would do. That's why this is what, sector strength. When we look for strong sectors, we look at names in those sectors and so on and so forth. Right now, everything's fucking red. Basic materials aren't looking bad. FCX, this is what XLB, I think. So yeah, that's what I mean when I say I also look for sector strength, right? Because money is constantly in motion. These guys are always rotating their money in and out into different names, blah, blah, blah. And so that's what I personally also look for. So again, full time frame continuity, we want to see actionable signals playing out, and we look for sector strength. All right, pretty simple. Now, just to give you a brief explanation of full time frame continuity, It just basically means we have buyers or sellers in our favor. Time frame flips and the domino effect are also on watch, meaning just like if the 5-minute goes 2 up, whatever, then that could potentially, the 15-minute could do this, right? That same ideology would be similar to if the daily does this, then that would lead the week to do this. And if the weekly does this, then the month would look like this, right? That's what I mean by domino effect. Time frames are going to affect each other. You could flip everything back to green, things could flip red, so on and so forth. And once that happens, that starts affecting full time frame continuity. So that's why we look for the domino effect. Intraday trading, again, like I said earlier, daily, hourly, 30, 15, 5, you can get away with doing that. But yeah, this is just full time frame continuity. You want to have, if you're going calls, you don't necessarily have full time frame continuity, but you do have a lot of good lower time frame continuity that may influence the quarter and the year on this little chart right here. If you're trying to go short, I don't know. I would have to look at the charts, but right here, it's not necessarily full time frame continuity. The quarter's still red, the year's red, but the month, week, daily, and hourly are green. You got continuity there, right? Actionable signals. So actionable signals are just price action setups that we constantly see playing out in the market. They help us gauge where we look to find our triggers and targets. When combined with the 2 universal truths, they also help us identify reversals and or high probability trades, right? And that's what I mean by we want to see an actionable signal with full time frame continuity, right? Because if I know, let's say we're trying to go long, we're trying to buy calls. If I know we got full time frame continuity on all these time frames, I know buyers are in full effect. I know, and then I see an actionable signal playing out, maybe like a boom, 2 down, 2 up, bullish reversal. I'm taking that back up into full time frame continuity, right? We're going 2 up, green. All the other time frames are green. This actionable signal is giving me somewhat of a clear target that I can try and target. Now, this is when time frame importance comes into play, because who knows if it's gonna do that tomorrow, if it's gonna do that next week, if it's gonna take 2 weeks to hit target, right? That's something that affects our contracts. But for the most part, when you see an actionable signal set up and you have full time frame continuity and the actionable signal is going into full time frame continuity, I'm taking that trade 10 out of 10 times, right? Every single time. You can't be afraid to take these trades, right? Now, the reason we're not afraid to take trades is because I'm going to talk on proper sizing later on. But when these things present themselves, after you really get confident and kind of know what you're looking for and everything, you're not going to be afraid to take these trades, right? Again, these opportunities don't always present themselves also. So there's times where there aren't really any trades to take. Like last week wasn't the best week to trade. There weren't really many great setups. And as we all know, last week was kind of all over the place, right? That wasn't a great week to trade, right? So again, you'll have times where you need to just take these setups when they present them to you. And then there's times where there are no setups. There's no full time frame continuity, no really actionable signals playing out. You kind of just got to sit on your hands, Really depends on the type of trader that you are, though. Like I said, you could trade those intraday trades and be smooth. Me personally, though, I like to, capitalize on like a weekly movement and shit like that. All right. So after we take into account, let's say we find a trade, right? We see full time frame continuity. We see actionable signal playing out. The next thing we do is analyze the price action, all right, based on the setup. So what that means is, what does the chart look like from an overall price action point of view, right? Has it made any aggressive moves recently? So if price made a really big move down, right, you can expect price action to come back up for a little bit, because I always tell you guys how price action moves, right? Price action does not move in a straight line. So I could do this for you real quick. And this is what I mean. Like this, right? Same lines, 229, 291. Price action is not going to go from 291 straight down to 229, right? It's not going to do that. Price action is going to do this. It's going to go down. It's going to come back up. It's going to go back down. It's going to come back up. It's going to go down, right? Price action moves like this. Never moves in a straight line, right? So if we know price action moves like that, you need to you need to analyze the price action, right? That's not necessarily the strat. That is just knowing how price action moves. Nothing moves in a straight line, guys. Look at this. It looks like a straight line, but it's not, right? Boom, boom, little TTO, boom, boom, little revert, little consolidation, right? This is not a straight line. This right here, this actually is a straight line, but that's kind of many. But any aggressive moves that I see, you kind of need to be prepared to expect somewhat of a bounce in the other direction, basically, right? Things aren't just going to keep dropping. They're going to come back up for a bit, blah, blah, blah. So hasn't made any aggressive moves recently. Is it consolidating? Meaning it's just in a tight range. It's probably inside on the week or the month, maybe. And if it is, that's actually something I want to keep an eye on. Have we made any recent lows or recent highs, right? So that's basically like hitting a lower low of the Brownian formation or hitting a higher high, right? And if it does that, there's potential exhaustion there. Now, let me give you a quick example of exhaustion. And if you're in the Discord, I've been trading GLD for a while. I got in some January calls, but this is kind of like what exhaustion kind of looks like, right? We got in GLD like down here, rode it all the way up. Here's your TTO right here that we also played. I entered this. We capitalized off this movement in the Discord. But I also entered again here, right? I kind of knew we had potential exhaustion. This is a really big move. We should expect, if we're going to make another leg up, you should expect price to do something like that, right? It needs to kind of retest its own levels. It's sort of like retesting its own strength, basically. So it's not necessarily a bad thing because, price is kind of rebalancing itself. But at the same time, it's bad for our contracts because, theta and pullback is going to eat away at your contract. So from an options trading point of view, this isn't the best type of movement, but I'm still in those. I'm gonna just let them run. Because if we look at the higher time frames, green, 213, 2 up, that should go back and forth. We are green on the weeks, right? Just can't break through this level right here. Got to watch this level right here, right? These lows, we can't break through. These previous lows, we can't make new highs above. So we'll check that out. But that's just an example of exhaustion. Doesn't necessarily mean the price or the trade is invalid. It's just, price needs it needs a breather, basically, right? So yeah, take that into account, right? You want to look at that shit and make sure you're not, maybe catching the tail end of a big move already. Because if a big move happened, you could expect some type of consolidation or rebound after that move, right? What is a very probable price target we can capitalize on based off the setup? And that's a big thing too, based off the setup. Time frame importance and average daily movement goes into that, right? If your setup is on the month, like right, let's say my setup is on the month, right? Let's say this is the quarter. The quarter looks real good for gold to come back up to these highs, maybe about 190s, right? So if I'm looking at this on the quarter, you should not be, taking trades based off the daily because you think price is going to come up to here to 190 on the quarter, right? This is a quarterly trade. These are quarterly candles. So you need like, you might need like half a year, 6 months, right? This could take 2 candles to get up here. And that's quarter. So that's 3 months, that's 6 months. Now that's saying that there's no pullbacks either. Again, we know price doesn't move in a straight line. So it could do this. right? And that's on a quarter. So that could be 3 months, 3 months, 3 months. That's a whole year. All right. So that's what I mean by you need to kind of know time frame importance of the setup you're looking at. If I'm looking at this on the quarter, obviously you need time. If you're looking at a setup, let's say on the month like this, if I see a setup on the month like this, 213, I'll go into the week and say, all right, where's our weekly targets? Because now I have a bias for the month. I know what price is going to go on the month. Now that helps me gauge the week. How can I play this by the week? You know, what's going on? Once I see the weeklies, blah, 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 then we play it by the day, so on and so forth, right? So that's why I say time frame importance is a big thing. And then after that, or time frame importance of the setup that you see, right? If the setup is on the hour, 212 up on the hour, well, you're only trading that hour, right? If it's 212 up on the week, we have a little wiggle room, right? We can trade this thing all week because we know where price is going. If it's 212 up on the month, again, similar scenario, but this is a monthly time frame. So on the daily, you know, we could have TTOs on the daily, and that could mess up your contract. So all these things, you know, you have to keep in mind, right? Time frame importance is a really big thing. After all this, then I'll plot some bond formations. I'll see, you know, has price made lower lows, higher highs, blah, blah, blah. And then I'll analyze the price expansion, right? So like, where do I think price may go? Going back to GLD, I didn't really chart this. I didn't really chart this bond information until I saw this 213 playing out. So I was like, all right, bet, let me see what the price expansion down here is going to look like, right? Because I know price, it could, but it's not just going to do it right now. Price could expand all the way back up to here, right? 190s. But I know, let me play what's going on right now. So what I did was go to the month. I saw that setup, went to the week. Here's my points, right? Here's my high. Here's my higher high. Here's my low. Here's my lower lows. Doesn't really need to be perfect, but as you can see, price expansion is real, right? Now, the reason we know this is a thing is because you can look at it like this, right? Here's one candle. Here's your 2 down candle. And here is your 2 up candle, right? What is this? A 2 down, 2 up. What is that? That is an actionable signal right here. 2 down, 2 up. There's your high, there's your low. There's your bond information, all right? That is price expansion. You can see that right here, right? Boom, boom. That's why I say we have potential exhaustion. Let me take that out. But yeah, that is an example of like me finding a trade and then going in and plotting what I can kind of see from price action and where price could expand to, right? Now, after we do that, this is all what I do when I go hunting, y'all. Like when I go find plays and stuff, right? It's not simple. You can't just do this within a minute. This stuff takes me hours. It takes me like 2 to 4 hours every day, every weekend, just going over hella charts. All right, but after we do that, we go into contracts analyzation. So I look for contracts that are liquid, tight, good Greeks, etc. All right, what that means is liquid just basically means there's liquidity, there's volume, there's open interest. The reason we want liquidity is because we want to be able to enter and exit when we want. All right. If you've ever been in a trade where you set, well, first off, your spread, your spreads are a big thing too. If your spread is not tight, meaning your bid is $1 and your ask is 110, that's a $10 difference in the spread. That's pretty big, right? I like tight spreads where it's maybe 5 cents, 3 cents differential between the bid and the ask, right? If you have a loose, the hell's the word I'm thinking about? If you do not have tight spreads, you could potentially get filled on a trade and be all negative already, right? Or if you try to sell, because the spread is so loose, no one is buying your order, right? No one wants to buy what you have to sell because you want to sell it at 110, but there's 109, 108, 107, 106, 105, all the way up to 100 where the bid is at. You get what I'm saying? So those things are kind of nasty, right? So you want to have tight spreads. And if there's no liquidity, then that means there's no one there participating anyway, right? So you can enter a trade, you go to sell it, price is going up, you go to sell your calls, no one's buying it, right? Even though price is still going up, right? No one's buying your contracts, and that's because there's no one actively there participating in the trade and the buy and sell, right? So there's liquidity would be volume, open interest, blah, 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 tight spreads, good Greeks. So you just want to check your delta to theta ratio, check your gamma, it kind of shows how much that delta is going to move. Check your implied volatility. If there's high implied volatility, then that means the contracts might be a little more expensive than usual. Yeah, these are all things you got to kind of know. And if you don't know how to analyze contracts, well, then I'm not going to go over it today, but that's something you definitely should be on your, I guess, list of things to learn. Right now, when we do this, sometimes the trade is valid, but the contracts are not tradable. Let me see. Yep. Stay away from cat. I stay away from like Etsy, eBay, Home Depot's is fire, but they got ugly spreads. Etsy got the ugliest spreads. Snow, ugly spreads, right? All those names. Yeah, I feel you though. But sometimes the trade is valid, but the contracts are not tradable. And that literally means everything I look for in a contract is ugly. So me personally, even though the trade is fire, it's valid, things are moving, I still won't trade it because, these are what's the word? These are habits that you need to build. This is where discipline comes into play. All right. Even though the trade is great and I'm like, damn, that shit is moving, I know I can't efficiently trade it because of the contracts, right? I don't care, right? You just got to let that go, right? And these are habits you're going to build and form, and it's going to pay off in longevity, in the longer fucking view of things. My bad, I'm getting a little flustered. But yeah, sometimes the trade is valid, but the contracts are not tradable. So, say la vie, man. Sometimes you have to get like monthlies, because those are the only ones that are liquid and they don't really move with like the price movement today isn't really moving the monthlies that we have. So it's like sometimes it's not even worth it risking your capital, so on and so forth. So yeah, contract analyzation, if they're not good, you just can't really fuck with them. So me personally, I look for contracts that make sense in correlation to the trade and setup. Again, I need to emphasize time frame importance. I personally like to play the weekly movements. So what I mean by that is I kind of want to know where price is going to go this week so that I can capitalize off that. That doesn't mean I'm going to be trading weeklies because, again, we go to contract analyzation. And as we know, if you're trading same week expiries, those aren't the best ones to be swinging, right? The delta's going to be cool, but the theta is going to be really, really high. Yeah, it's just, you could do it if you want, but that's not something that I practice, right? If I know where a price is going to go on the week, if next week's are cool, then yeah, I'll grab next week. But usually it's monthlies. And it's usually we can hold those monthlies for a couple days and hit 100%. It's not like you need to be taking such high risks on weekly setups and weekly contracts, right? Like, just for an example, you see some, I don't know. Shit, always going back to, all right, OKE, let's see, OKE right here. OKE, I was in December contracts. December 22nd is actually December 16th. So these expired last Friday, but I already exited. But look, OKE, we entered OKE right here on 11/07. So we're entering next month's December 16 contracts on 11/07, right? The reason I had to use those is, number one, price wasn't that bad. They're only $100. They were liquid. The Greeks were fucking beautiful. Spread was tight, right? Everything I say you want to look for was looking good, right? So OKE, you get in there at 1.05. You have a whole month and a half to let this thing play out. But within 11/7, so within like 4 days, we hit 100% on this, right? And that's because we know where price is going to go. But we don't need to be taking unnecessary risk on our capital. All right, guys, that's why, contract analyzation and just knowing what to get is really key, right? That's why I said, I look for contracts that make sense in correlation to the trade and setup. I need to emphasize time frame importance. I personally like to play weekly movements. So as you see on that OKE trade, that was a 4-day trade. That was the weekly movement, but we didn't trade weeklies because they're just too high risk. It's not ideal. You can't be, developing that type of trading style if you want to be here for a long time. If you just want to get quick money, go ahead and gamble, right? Last thing is capital management. I saved this for last because this is probably the most important thing in my personal opinion. If you're not properly managing your money, then what I mean? What are you even doing here, right? You trying to gamble, bro. We're not here to gamble. I am here to build my capital, right, in the most efficient way possible without taking high risks. That is the name of the game, all right? So proper sizing guidelines. I mean, this is kind of like how I see it. It's kind of a general rule of thumb too. Again, this is just a general guideline. We are all different, right? You might have a different risk tolerance than I do. You might be able to hold trades that go negative 30% and be cool. Me personally, I can't really do that, right? So we all have different risk tolerance. We all have different portfolio sizes. We all have different psychological things going on, right? You know what I'm saying? We're all different. So this doesn't necessarily mean you have to do this, but this is a general rule of thumb. High risk is anything over 15% of your entire account, right? So if you have $1,000, 15% is $150. That is high risk, and that's the most you should be risking on any trade you take if you only have $1,000. Now, if you only have $100, then to be quite honest, don't even trade. Go paper trade, practice, and just stack your bread up, right? Keep funding some money into your portfolio, right? If you only have $100, odds are you don't even know how to trade, right? That's just the harsh truth because you're still learning, right? Medium risk would be 5 to 10% of your entire account. Same thing, yeah. Instead of 150, it'd be $100, right? Low risk is less than 5% of your entire account. If it's 1,000, you'd only be risking like $50, all right? That is great. And the reason that's great is because if you're only risking $50 of your entire account, after you have a proven, or my bad, if you're only risking less than 5% of your entire account, after you have a proven strategy, after you have something that works for you and is consistently profitable, then the next thing that's hindering your growth and how you're going to build your account, again, I'm saying this after you personally already have a proven and consistent strategy that you can duplicate over and over again, right? This is after that, all right? Once you have that, the only thing hindering your growth is the psychological aspect of these trades, right? As you guys can see, my trades are I do hella shit, right? A lot of 100% trades. Last week, AMD 116, JP Morgan hit 101%. Took some L's on the longs, had to cut those hoes, but right? We switched it up, price action. Swing trades, 100% is pretty, this one 230, right? It's not uncommon for y'all to see me hit 100, 200%. And the reason why I can do that is because I found something that works for me. And it all boils down to me personally, proper sizing. I'm comfortable letting these trades do what I think they're going to do because I know I'm not over leveraged, right? Even if the trade goes against me, I'm good, right? It's less than 5% of my entire account. If the trade goes in my favor, though, then I am right. So why am I going to cut the trade early, right? The only reason you would cut the trade early is because psychologically you see the money you made and you're like, damn, that's a lot of money. I need to cut that, right? That's good for a beginner, but like I said, if you have proper risk and you're right, why are you not letting yourself continuing to be right? Price is doing exactly what you think it's going to do. So let that thing play out. Now, what I do is secure profit and leave runners, right? That's what works for me. But the entire position is less than 5% of my entire account anyway. And so I'm not afraid to take the trade. I'm not afraid to take the loss. And that's the big thing. That's the psychological aspect of why you may or may not be taking trades and why you may or may not be building the right habits that, correlate to longevity in this type of game. All right. Now, when you do all this, this builds good trading habits and discipline. We're here for longevity. So if you only have $100 in your account, right, when you have $100,000 in your account, there's no fucking way I'm trading the same way you are. All right. $100, you put up $20, that's 20%. I have 100K, I'm putting up $20,000. That doesn't, you get what I mean? Even though you're only playing with 100, that's still not a proper way to be trading. You're pretty much just gambling, right? I also don't really go crazy with zero DTEs. If you guys see me trade zero DTEs, I'm playing with a couple $100. I'm not trading thousands of dollars with that because that's not personally something I like to do. That's not a high probability, low risk trade. That's high risk, high reward type of trade. So you gotta, play that one accordingly. Right. That's probably it. That's gonna do it for the little seminar or whatever Zoom today. So let me what the hell? Where's the thing at? Oh yeah, right. So let me see if y'all have any questions or if anybody wants to just speak up and just ask anything. Now would be a good time. Ask any questions on anything that I just went over. Y'all can unmute if anyone wants, but yeah. If that made sense, I don't know. If y'all got any if there's no questions, I'm assuming everything made 100% sense and everyone should be hitting 100% trades next week. Go over costs. Let's see. Gotcha. Let's see what's up with cost. Ooh. I think I was looking at costs earlier, man. I don't know. First thing you see on cost is a 312 on the quarter, bro. So let's kind of fix this a little bit. Yeah. Right now, if we're gonna kind of give ourselves a higher time frame bias, cost is 312 on the quarter. All right. What's cost looking like on the month? Failed 2 up on the 1 year. All right. Shit, this motherfucker could go 2-2 reversal right back down on the year. That's just the year and the quarter. Right. So now, again, though, if you see this on the quarter, longs are not very enticing. All right. Not saying that it can't reverse, but just seeing this on the quarter, going long isn't the best situation. So now here we see price discovery is kind of gonna be presented to us, man, because this is pretty much a 3-bar right here. And this shit is all inside still right here, right? So to be quite honest, it's not really a great setup yet. Let's see, that's the month. This is the week. All right, see right there. So I mean, if I'm gonna say where it's gonna go this week, it's probably gonna hit 447 right here. If it's gonna go say 3-2 down this week, but this isn't really something I would trade, right? This thing is kind of stuck in equilibrium. If we see where it is right here, this thing could just chop around down here for a little bit. So cost is in XLY, I think. So if we look at XLY, shit, remove this. Yeah, I'll go over. I haven't really gone into the charts yet, but I have a name and some sectors I'm looking at. XLY. Is this cost? What sector is cost in? XL.
XLP, I think.
Oh, XLP. Yeah. There we go. So XLP actually has been looking real nice on the XLP as a sector is looking good. I mean, we're going outside. Look at XLP on the quarter. We're going out. We went outside quarter 323. That's super tricky. We are hitting somewhat of some exhaustion here, right here. If we can break through here, it's going to go for new highs probably. But again, the whole market's kind of turning last week, so the fact that XLP kind of stayed relatively strong isn't that bad. But if you guys see what I have here, kind of looks like our XLP is going to come back down to revisit 73-ish. Now, what it's going to do there, I can't tell you. But what we can try to assume is that it might do something like this. If we're looking at a bullish scenario, we could see that it's going to do something like this. Right. And that's, again, this goes back to what we said earlier, right? Price isn't going to move in a straight line. Look at this. This is 1, 2, 3, 4, 5, 6, 7, 8 straight weeks. This is damn near a straight line, right? So when we look at the price action, after seeing all this run up, how much does this motherfucker still have in the tank? It needs to take a breather. So again, boom, boom. If that's a long scenario. Now, once we get here, if we continue down, I don't know. Maybe we're going to hit new lows then. I don't know. I can't predict. I just react, right? But we prepare ourselves for the scenario. So that's what XOP is looking like. If we look at other names, PG was fire. Again, all these things are like going straight up. It's crazy. KO. Yeah, not a bunch of crazy setups is going into this new week, to be honest. But costs, just in general, you see this 312 down on the quarter. That's not that great if you're looking to go long. And then pretty much just kind of stuck inside right now. Hasn't really given us. I'd say it's probably going to go for a low, for new lows though. What else we got? What ticker setups are you liking this week? I haven't gone into it yet, but one thing that I do have that I had added to my longs was Facebook. Facebook looks pretty good. I'm not going to lie. Now, we do not have full time frame continuity on the quarter. Obviously, you guys see the quarter right here, super nasty. Let me just scope some levels real quick. Then I'm gonna go to the month, see what that shit looking like. See, I like this right here a lot more. because we have some price reaction there, price reaction there. I think I'm gonna move it down a little bit though. Right, I want to get that close and that low. And we see it's kind of lining up nicely here. All right, so now if I'm going to take a gander at this, I'm pretty sure. I mean, not pretty sure. This is why I'm looking at Facebook going into next week, because we have 2-2 reversal on the month, and last week it actually held up pretty damn strong. I mean, with everything else dumping, Facebook was green and inside last week. So what we are looking for this week is a break above right here. I don't care if it breaks this high. I need to see last week's high get broken, which is only about 30 cents away. And so if we do this, if we do this, my target's gonna be 130. Now, what is that gonna do to the quarter, right? If we hit 130 here, that could potentially, I mean, this thing's already looking like it's ending kind of hammy, but could potentially flip the quarter back to green, right? So where would we flip quarter green? 138 right there. So on the month, right, I'm being conservative, right? I'm looking at price action. So my target is going to be 130. But technically, if we hit target on the month, which should be, which should be this right here, right? If we hit that target, that is going to flip the quarter green, right? This is no longer going to be red. This quarter will be green. Will be a green failed 2-down hammer, which could lead us into a retracement back up to about right here, right? Again, why am I thinking that? Because look at this aggressive move down. You don't think price is going to do something like this before another move down, right? I don't know if it's going to do this move down, but I know we should expect some type of bounce, especially when we look at previous price action here, right? Here, there's a lot of shit going on down here. So, damn. That motherfucker was gassing that shit. I live next to like a long ass street. People always be gassing shit over here. AMD MS, what's that? Yeah, so we know. So look, we know that this will flip it green because we are going to. So the reason this candle right here is red is because price is now lower than where this candle opened, right? Let me zoom in. So this candle is red because this is the quarter, all right? So what was 3 months ago? November, October? I think October. So in October, this candle right here opened at what? I don't know. What is the open? 137.17, right? Opens right there. 137.14. Now price is here at 119.48, right? So I know that if this monthly setup plays out, this candle will be green again because price will go back up to about 137, which means price will be above the open, which means this candle will be green because price will no longer be below the open. It'll be above the open, right? That's the reason why I know it'll be green. And the reason I don't know, I'm kind of just, predicting what could happen. But the reason it could do that is because the setup we see on the 1 month, if the 1 month setup plays out and hits the target, right? Let's go back to actionable signals. The reason we're thinking that's going to do that is because we are looking at this actionable signal right here. Fuck, it's kind of blurry, but here, look. 2 down, 2 up reversal. right here, right? 2 down. This is a 2 down, even though it's green. 2 down, 2 up reversal. So we are looking for price to do this right there. All right. We are looking for price to do that. And if it does that this week, or if it does that in the next 2 weeks, because we still have 2 weeks left to the month. If it does that in 2 weeks, in the quarter, well, price will be up here. So the quarter will be green. All right. Think that right. All right, cool. What else? MS. What is that? Morgan Stanley. Oh, financials. Yeah, I've been looking at financials too. I've been short on financials. I got a bunch of shorts in my I have let's see. My short list on financials. What do we got? JP Morgan. Let's check them out. Let's check out financials real quick. Woo, nasty reversal only month. But honestly, I had these bond formations already set up, right? So again, this is what I kind of mean when I tell you guys I want my bond formation to kind of just give me a broader view of price expansion rather than, I don't really use it as areas of support and resistance. And again, as well, we have a broadening formation inside of a higher time frame broadening formation. So looking at this right here, what do you think this is, right? Where are we going? Did we make a new low? Here's your low. This is the monthly time frame. Here's your low. Made new highs. Here's your highs, right? Where is price going now? It should be going back down to hit new lows. It should, right? But what do we know price does? Does not move in a straight line. Again, this is like a dead, I keep saying this shit, but look, boom, boom, boom. Probably going to do this and then maybe hit a new low and then maybe come back up. I don't know, right? But that's how I analyze price action. So I know that there's broadening formations inside broadening formations. So now what I did was, I had this plotted. It's a lot easier to see. Look, this is the monthly on the top right. This is the quarter on the top left. And this is the weekly. On the weekly, this broad information is way easier to see. Now, this is a very aggressive move up. Of course, you can expect exhaustion. Now, are we going to fully reverse all the way back down to here? Shit, I don't know. If it does, then we'll run that down too. But that's why I personally took shorts on JP Morgan last week. I know you said MS, so let's go. My bad. MS. Ooh. MS is funky, bro. Let's see. We'll do sloppy bond formations. Actually. All right, I guess I'll do a little charting or how I would approach trying to draw a broad information right now. All right. So this will give you guys a little broader scope of how I draw mine, I guess. So right off the bat, we're looking at the month right now. Here's your high. Here's your new high. Here's your low. There's your lows. All right. Let me just delete these little yellow lines. I don't need them to be perfect. Doesn't have to be picture perfect. I just want to get a better view on price expansion. All right. So this is what it looks like on a quarterly time frame. So now that we have that on the quarter, let me go to the month. I just wanted to encapsulate all of the price action, but honestly, we want to be a little more zoomed in. You want to encapsulate what is happening now rather than, broad informations that really don't do anything but sit on our chart. Like I want my broad informations to help me take trades. I don't really need them to do anything else but that. Yeah, this is kind of nasty on the month. It's not the prettiest. I'm gonna go. So right now I'm gonna go into the lower time frame and kind of edit what I see here. Actually, kind of like this more. I don't know. It looks weird. Boom. All right, on the daily, we are looking like yeah, I guess we'll fuck with that one. MS right now, not necessarily setting up for anything for me personally. If I'm looking at this, I personally don't see a trade for me to be taking here. I mean, you could go short below possibly. You could go short, I guess, below about I mean, if this goes 2 down, maybe target 83 or something. But right now, Morgan Stanley isn't really the best setup. You know, there's not much here. I'd probably just skim over this. But I think I was shorting C for a while. And if you see on the monthly, it just went 2 down. Shooter on the quarter. Let's see. Not a ton of actual actionable signals playing out. Nah. Yeah, to be honest, financials, I don't know, they don't really look that enticing going into this week. Not a bunch of shit going on. AMD and then CBS. AMD, let's see. I already shorted AMD last week. So this is what I've had on AMD for a while now. You see, you know, we hit these highs. Also couldn't break above 78. If you were in the Discord, pretty sure I was peeping AMD. God damn. Been peeping AMD short setup since 1205. And this is what it was looking like before. So this is what I see when I was looking at AMD. Failure to break these lows if they were going to push. Also exhausting at the higher highs of this lower time frame Bron formation on the week, setting up a 2-1 on the week, and then we went 2-1, 2 down. Outside, this one was tricky as fuck. So, I mean, with AMD, you see how price moved here. All right, so this is the initial consensus for AMD. And then we go down, AMD starts to trigger the short side setup, right? On the week. All right. So me seeing this short side setup on AMD, this is what I expect right here. All right. So I am expecting the drop down, which we got. And of course, me knowing price action, right? We can expect a move back up. Now, what is it going to do there? I'm not quite sure. That's why I have 2 scenarios, a long scenario and a short scenario. But I know price is going to bounce back up, right? That's what I mean by you got to know price action. The strat doesn't tell you none of that. That's just knowing price action. All right. So we know price is going to bounce back up. And so here price bounced back up, right? It went down, up. And so when it did this, I wasn't sure what was going to happen. But when it did this, I'm like, okay, there is my short scenario playing out right here. That is my short scenario. There's your short scenario. And we shorted AMD, right? Last week. Pretty sure motherfucker went crazy. AMD, 116%. What is going to happen this week, though, with AMD? Now, again, knowing price action, we should expect something like this. Boom. It probably hit 64. It's probably going to come back up to about 69 before it takes another leg down. Now, is it going to do that? It could do this, like for like, you know, could do that before it takes the leg down. All right. That's what I expect from AMD. That's what I expect to happen this week. And that's why I said we should see a bounce this week. So expect AMD to bounce back up to about 69, 70 before it may make another leg down, right? The reason I say it's going to bounce back up is, again, price likes to retest its strength. So just like price tried to test this and it didn't hold, they're going to try to retest it and see if they can break back up. But obviously the algorithms are going to be selling. So once price gets here, boom, it's probably going to drop. All right. So that's what we can expect out of AMD. That could just be all week, right? From 65 all the way back up to 68. I don't know. That's just what I'm expecting. But am I long? No. That monthly is not bullish. And this quarter is about to go back to red. Pretty sure we're going to go back to red on the quarter. We're $1 away from going back into red on the quarter. So yeah, this month is not a bullish candle either. We might go outside month below 58. So AMD, I would be I'd be short. Or I would short the retracement up. Because you could get a discount, blah, 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 blah. You know, get some contracts for January. Actually, me saying that, I am literally in. I'm in January 60 puts. Now I rolled. The reason I'm in is because when I did the day trade on AMD, instead of closing them out, I just was like, fuck it, let's just keep riding it. So I rolled those 67 puts from last Friday, sell those, and I bought January 20th puts that expire in a month or in like 6 weeks, right? And the reason I did that is because me seeing this, I'm like, yo, AMD still has a lot more ways to go. So let me milk that position, right? And that's free money anyway, because that's only 5 contracts. I had 10. So I already secured my money. You know, let that shit go. What else? CVS. I think someone said CVS. No problem, bro. CVS. Oh. So CVS is looking like on the quarter, right? Hit these lows. We came back up. Something to note with CVS is that like around here, where's this yellow line? 105, 108 is super sell zone, seems like, right? Whenever price gets up to about here, they are selling it. So something to keep in mind. 212 down on the quarter, not really moving in force though. This shit is just straight chop, to be honest. This is just straight consolidation here on the month. I mean, look at the monthly expansion. 109. That is what? How many months is that? This is Damn, that's a whole year right here. This shit ain't been doing. I mean, it's been moving, but in terms of like what it's been doing for the past year, this thing really hasn't done anything. It's kind of consolidating. So in terms of setups, though, I mean, if it breaks below previous week's low, 94-ish, it could definitely make a move back down to about 90. What is things looking like though? That's a better, we're 2 down on the quarter, so that's somewhat of a more high probability. Actually, now that I'm looking at it too, CVS is probably going to go outside month. It only needs $3 to do it, and we still have 2 full weeks in the month of December for this thing to move from here to here, right? That's all we need from CVS, and this thing will be an outside month. And so again, if you know this thing is going to go outside month, then your target is this low 93, right? And if it does that, well, we know that it's breaking through pretty critical levels here, and it could make its way back down to 90. All right. Now, how you want to structure that trade is kind of up to you. If you want to take high risk trades, then you would get weeklies, but it might not be the best thing. Matter of fact, I could look at the fucking contracts for you real quick. So CVS, let's see, what the hell? CVS. If you're looking at weeklies, that'd be 1223, and that would be these. 0.90, 0.43 delta, 0.08 theta, 0.12 gamma, but nobody is home. 146 volume, 325. Nobody's here. Nobody's trading. Let's look at the option prices. This is where we check the spread. 1223. Next, this is this week. If we're gonna be 95 puts. Again, no one is home. 146, 325, 56, 53 on the 94s. Spread. The spread is wide as fuck too. 0.95 to 1.04. The bid is 0.95. The ask is 1.04. So this is one of those scenarios where I'm like, that's not necessarily the best thing to be looking at. All right. Because if you get filled at the midpoint at 1.00, you're going to be down 5 cents already. I'm just telling you that now. All right. If you get filled at the mid, you're going to be down 5 cents. Now, that might not be a lot if you're playing with small size, but when you start to play with a big size and buy 10 to 20 contracts at a time, 0.05 times 20, what is that? I don't know. What? Oh, no, 5 cents, my bad. 5 times 20. Damn. You're going to be down $100 already. If you bought 20 contracts and you got filled at the mid here at 1.00, you would be down 5 cents already. And so you would have entered and been immediately negative 100. That's not ideal, y'all. That is not, I'm not trying to enter trade and be negative off rip. You know what I mean? So, and then when you go to sell, you might want 104, but people only want to pay 95, right? So, this is what I mean by you want to check those spreads. And then there's no liquidity, so nobody's here. So would I be trading CVS? Probably not. If you want to find the better contracts, you got to go to the monthlies. And the only monthlies left right now are next January. So now look at the difference in the monthlies. Puts, 95 puts, they're way more expensive. You got to assume that though. Look at the liquidity. Oh, volume's kind of nasty, but there's definitely a lot of open interest. So people are writing. There's a lot of orders out, but there's no actual contracts being traded, if that makes sense. Can look at the Greeks. The Greeks are probably very different. 0.45 delta, 0.03 theta, 0.05 gamma, lower gamma. Again, monthlies always have way better liquidity. If you look at these, all we see is commas. All right, but volume wise, there's really no one home still, except for these 90s. These 90s is something I would maybe try to go for, right? Because you have like 6 weeks to let this play out. It's only $1.02. Delta's 21, gamma is, or theta 0 pre, that's pretty cheap. And the liquidity is very, very nice. All right. Now let me look at the spread on those 90 puts. And it's way tighter than this 95s, or yeah, way tighter than these 95s. This is not bad. Compared to what we just saw, these 90s are probably the best looking contracts that we saw. All right. So no, I'm not, you could try it, but I would say the January 20th 90 90 puts are a way better option to trade. And this is the thing that kind of goes back to what I mean by like, you could find a great trade, but sometimes the trade is valid, but the contracts are not tradable. And that's just it. That's just how the market is. But yeah, so I'm probably going to cut it here. This is going to do it for the seminar. I guess the only thing that I mentioned I'm looking at for this week is Facebook, because we see. Actually, let me go analyze the Facebook contracts real quick. So I'll post in the Discord too. What the hell? I'll post what contracts we want to take. So I'm going to look at the next week's, because, Facebook moves pretty aggressively. It has a lot of volume and liquidity. So I know Facebook is always going to have people trading it. Like, look at this right here. This is way different than what we saw on CVS. So, I'm not worried about trading Facebook and getting trapped in a position or anything. There's always people here. But again, we look at this monthly setup, and if we are expecting a bounce this week, then once we break 124, I'm going to grab 130s. So let's see, what are these 130s looking like? 130 calls. It's not even on the thing. And I gotta add more strikes. So the 130s are at 0.36. That is cheap as fuck. Now let's see what the next 2 weeks out, what are those contracts looking like? The 130s are 0.79. Not as much volume and open interest though. Oh no, my bad. The 130s are 0.92 and they're not bad. Yeah, 1,000, 7,000. That's not bad. Not bad at all. Average IV is 40. What are the IVs at right now? It's regular 40. So that's smooth. That's smooth. All right, now let's go into the volatility in Greeks. 130s. Got to add more again. 130 calls at 0.93 for 2 weeks out. Delta is 0.17 and the theta is 0.09. That's actually not that good. I would want my delta to be more than 2 times my theta. Theta is already 9. So this should be like way more than that. But your gamma is 0.02. That's not even that high either. So, me analyzing these contracts on Facebook, if we are at 119 now, let's see, I would be comfortable taking either these 130s that expire. Let's see, 130s, 0.10, 0.10. Yikes. Yeah, so I'd probably be comfortable taking 2 weeks out, the 1230s, and I'll do the 130Ps at 0.93. Now, again, we have to go with proper sizing now. So me taking into account the type of risk associated with this trade, I would probably get about 5 to 6. That's still, for me personally, that's way less than 5% of my account. So I'm still really, really well risk adverse, but just taking into account the risk in the position, if I put about 500 to 600 bucks here, if what we think is going to happen, I'll get 100% easily. So I'm happy with that risk. I'll wait and see what happens on Monday to see how I'm going to gauge this trade. But again, look at this weekly 2-1 week. If we go 2-1-2, that would be nice. And we could, boom, hit our target there on the month. And the reason I'm expecting that to happen is because we are already playing out an actionable signal on the month. So that weekly setup is just going to put this monthly into force. And it's going to hopefully make it move up to target. And again, this would be full time frame continuity. The month is green, the week is green, the daily is whatever. That shit can be red and green. But what we want to see is the quarter flip to green as well. So it's not the most high probability setup because the quarter is it's 2 down in red. Damn. But yeah, not the most high probability setup because we don't have full time frame continuity, but I like this. I like the trade, especially if we are expecting to see some upside next week. Yeah, so I'll be looking at, put them in the Discord. Facebook 1230 130 C's. I'll just type that in there so I don't forget. What else am I looking at? Nike. These were things that I had on the long list. PFE hit target. I kind of fucked up and missed it. But yeah, PFE hit high target here. Should probably, we'll see what it's going to do. PFE's been on a real crazy run. Crazy. PM, Philip Morris, cigarettes. Interesting. Yeah, I'll probably get into the charts a little later tonight. Vail, still think Vail's bullish. We'll see how that goes. GLD should get a nice pop back up if we do go bullish this week. Shorts, energy, obviously. I'll do a little bit of my charting and everything later, but that is going to wrap it up, guys. Thanks for coming out. Hope you guys learned something new. Hope it helped you guys out. If you're not in the Discord, really recommend you hopping in. Everything that I do in the Discord, I pretty much just alert everyone whenever I do everything. So I alert my entries and my exits. Like this one, Vail, we took a little loss on Vail. Yeah. What else? I don't know. I'm in 140p Apple, and then Apple ended up doing this, right? Day trades, I'll alert that too. So last week, AMD shorts, if you like risk, JP Morgan 130. Week before, SPY 395s. 395s went pretty good. Baba 85 call. Target hit. I'm out. I had 10, took 5, or sold 7, whatever. These things that are going crazy. So yeah, everything that I do and trade, I alert in Discord. And yeah. Shout out to everybody for pulling up, man. I'll see y'all, man. Hope you have a good day. Yeah, let's kill it this week, man. All right. Peace out, gang. Oh. No problem, bro. Right on, right on. I'll see y'all bright and early tomorrow. You know how it goes. All right, y'all. Peace.